Hi, everybody. Welcome to Stop Being Sold, a community of informed consumers who are sick and tired of being sold products that they don't understand or need. So if you are tired of being a transaction, go ahead and hit that subscribe button and the notification bell so you never miss another video from us. My name is Michelle, and this is Brian. How are you doing today, Brian?
Doing great, Michelle. How are you doing today?
Fantastic. So today we're talking about retirement plan contribution limits. The IRS just a few days ago announced that they have increased, not everything has been increased with qualified retirement plans, but there's a lot to talk about. So let's dive in. Let's start with 401ks. So for 401ks, 401(b)s, the federal Thrift Savings Plan.
Yep.
And in most 457 plans, the rates have increased.
Yes. So last year, Michelle, they were 19,500 was the limit for the year. This year, they jumped up to 20,500. So an additional $1,000 that we can put in. And then also for those 50 and older, you got your 401k catch-up contributions. That remains the same as last year for $6,500. So for all 2022, it's still only going to be $6,500. So.
Got it. Okay. All right. So what about after-tax 401k contributions for those that are self-employed?
Yeah. So for those that are self-employed or your employer allows after-tax contributions, it went up to $61,000 for 2022. And in 2021, they were 58,000. So
58,000, right?
Yeah, $3,000 increase. So that's good there for after-tax contributions.
Got it. Okay. So IRAs, not a lot. No, they did not. The contribution limits did not change for IRAs.
No. Same thing.
But what did change are the deductible IRA and the deductible Roth IRA phase-outs.
You're exactly right.
With let's talk traditional and Roth. What are the limits?
Okay, so for traditional IRAs, it stays the same as last year, $6,000 maximum contribution, and that applies to pre-tax or Roth IRAs. Also, the same thing, catch-up contributions for those over 50 is still the same $1,000, which is okay. I mean, you're still putting something back, right?
Right.
And then the deductible IRA phase-outs and Roth IRA phase-outs were a little bit different. So you can contribute all the way to 2021, all the way to April 15th of next year. If you have an IRA, so you get to maximize it before April 15th. So you can wait till all the way up to April 15th of next year to still get that contribution limit. So. Okay,
so let's talk a little bit about the IRA phase-outs.
Mm-hmm.
What were they in 2021 and what have they gone up to?
Okay, so in 2021, they were between 66,000 and 76,000. This year, it goes between 68,000 and 78,000. I'm sorry, for 2022 is numbers. And let's also take the adjusted gross income phase-out limitation for married couples. If you're filing jointly, you can contribute to your IRAs between 109 and 109,000, 129,000 for 2022. And that's up from 105 to 125,000 for this year in 2021.
2021, right. Okay. So what about, so you mentioned married couples. What about individuals?
Okay. And let's take it one step further. Not only the individuals, the individual phase out was 68 to 78,000.
Oh, that's right. Okay. I'm sorry. So I meant, okay. Yeah. Got it.
So let's take someone, Michelle, that's married to somebody in a workplace retirement account.
Right.
And of your joint income has to be between 204 and 214,000 in 2022. That's jumped up substantially from 198 to 208,000 in 2021. So
got it. And that's for someone who is married to an individual who has a workplace retirement account. Okay, 401k. Okay. So what about the Roth phase-outs?
Roth phase-outs. 2022 also increased from for 2021 it's 198 to 208,000, and it jumped to 204,000 to 214,000 for 2022.
Okay. So for heads of household,
Heads of
Is that-
households.
like heads for
120 yeah, so heads of household, a little bit different. So if you're single, the phase out range is now 129 to 144,000 for 2022, and that's up from 125 to 140,000 for 2021.
Got it. Okay. All right. So what about let's talk about like SEP IRAs.
Okay, so let's look at the SEP IRAs, contributions for them.
Which are
SEP
simplified employee
I was just
pension.
going to say that. Thank you.
Yeah.
Some people might not know what SEP IRA is, so thanks for clarifying that. They've increased to 61,000 for 2022, up from 58,000. The compensation limit has also went up from up to 200 or from 290 for this year to 305,000 for 2022.
Okay. And what about simple IRAs, simple IRA retirement plans?
Yep. Increased to 144,000 for 2022, which was up from 13,500 in 2021.
Got it. Okay. Are there any other, did we miss anything? We did 401ks, after-tax contributions. What about for solo 401ks?
Solo 401ks. With that one there, that did change too. And also otherwise known, it could be a self-employed 401k or I-401k for individual 401k. Same thing, went up to 61,000 for 2022 from 58,000 for 2021.
Got it. Okay. And what about for anyone watching who has the savers credit? What's that all about, and what are the changes there?
Okay, the savers credit is also known as the retirement savings contributions credit. It's basically designed for low and moderate income workers. Their limit has increased to 68,000 for married couples, up from 66,000. For heads of household, the limit's increased from 49,500 to 51,000 for 2022. And for singles and married couples filing separately, the limit is 34,000, up $1,000 from 2021.
Okay. Are there any other contribution limit increases we need to cover?
That seems to be the majority of them as of right now. Like I said, there were some that didn't have changes this year.
Sure.
And you will see that from time to time. So
sure. Well, and IRAs have been stagnant they stayed flat, I should say, for quite a few years now.
Quite a few years, yeah.
Yeah. All right. One last final note to anyone watching. Remember that there are some changes that may come to all of this. If the Build Back Better bill, which is currently being discussed in Congress, if some of these provisions that are in it go through, they are looking to make some changes. But for right now, this is how it stands, correct?
Yeah, so we're stay tuned because there's so many changes going on right now. We got Congress out there debating back and forth what's going on, the Build Back Better. Some of you may have seen the infrastructure bill had just passed. But inside the Build Back Better program, you may see a lot of changes to the Roth IRA. So stay tuned for that video there. So.
All right. Well, if you like this video and you like this content and you find it valuable, go ahead and please give us the thumbs up sign, the like sign. We'd appreciate it. And also subscribe to our channel so you never miss another video. Thanks so much, Brian. Appreciate it.
Thanks, Michelle. Have a great day. Have a great day, everyone.